Arbitrum is processing more daily transactions than Solana right now, and it's sitting at rank 95 on CoinGecko. Let that sink in for a second. The most used Layer 2 network on Ethereum, the infrastructure that's quietly powering billions in DeFi volume every single week, and the market is pricing it like a mid-tier altcoin nobody's heard of. That disconnect is either a massive opportunity or a trap. And by the end of this, you'll know exactly which one it is for your portfolio. So why is ARB trending right now? Two things just happened in the same week. First, Robinhood announced they're launching their own chain, and they built it on Ethereum infrastructure, specifically leaning into the L2 ecosystem that Arbitrum dominates. That's not a small thing. Robinhood has 24 million funded accounts. If even a fraction of those users start touching on-chain activity, the L2 rails they're riding run directly through Arbitrum's territory. Second, CoinGecko's search volume for ARB spiked hard in the last 48 hours. That usually means one of two things. Either smart money is accumulating before a move, or retail is just now waking up to something institutions already know. Based on the on-chain data we're looking at, it looks a lot more like the former. Now let's talk about what Arbitrum actually is, because a lot of people still have this wrong. Arbitrum is not a competitor to Ethereum. It's more like a high-speed lane built on top of Ethereum's highway. Ethereum is secure and decentralized, but it's slow and expensive at scale. Arbitrum takes transactions, bundles them together, processes them off the main chain at a fraction of the cost, and then posts the proof back to Ethereum for final settlement. You get Ethereum-level security with speeds and fees that actually work for everyday users. Think of it like Ethereum being the Federal Reserve and Arbitrum being the commercial banking layer that actually handles your daily transactions. One provides the trust, the other provides the utility. What makes Arbitrum specifically interesting versus other L2s like Optimism or Base? Network effects. Arbitrum 1 has the deepest DeFi liquidity of any L2. GMX, Camelot, Pendle, Radiant, these aren't small protocols. GMX alone has done over $150 billion in cumulative volume. When serious DeFi money wants L2 exposure, it goes to Arbitrum first. That moat doesn't disappear overnight. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Now here's where it gets interesting for your portfolio. ARB is currently trading around 42 cents to 48 cents, bouncing off a floor that's held 4 times in the last 3 months. That kind of repeated support isn't random, that's accumulation. The $1.20 level is the next major resistance, and that's where things get fun. If Ethereum continues its current trajectory toward $4,000 and beyond this cycle, historically L2 tokens outperform ETH on the way up because they capture both the ETH beta and the increased network usage that comes with a bull market. More ETH activity means more Arbitrum transactions, means more fee revenue, means more reason to hold ARB. What's a realistic target? Conservative scenario? ETH hits $4,500, L2 narrative picks up steam, ARB reclaims rank 50 or above. You're looking at $1.50 to $2, which is a 3x to 4x from current levels. Aggressive scenario, Robinhood's chain drives mainstream L2 awareness, Arbitrum captures a chunk of that narrative, and ARB retests its all-time high around $2.40. That's nearly a 5x from where it sits today. Neither of those is a moonshot prediction. Both are grounded in where the network already is versus where the price is. But I'd be doing you dirty if I didn't walk you through the bear case, because there is one, and it's real. ARB has a token unlock problem. The project still has a significant percentage of its total supply locked for team, investors, and the DAO treasury, and those unlocks don't stop. When large tranches of tokens hit the market, price suppression is a real risk, regardless of how good the fundamentals are. It's happened before with ARB, and it'll happen again. You need to track the unlock schedule before sizing your position. Second risk, Base. Coinbase's L2 has been growing fast, and it has a distribution advantage that Arbitrum simply doesn't have. If Base starts pulling DeFi projects away from Arbitrum's ecosystem, that moat shrinks. Third, if this bull run stalls or ETH doesn't break out, ARB could drift back toward 30 support, and no amount of good fundamentals saves you from a broader market correction. So what's the actual verdict here? Arbitrum is the most underpriced blue-chip L2 in crypto right now. The fundamentals are genuinely strong. Real users, real volume, real ecosystem. The Robinhood Chain catalyst is a legitimate tailwind for the entire L2 narrative, and the chart is sitting at a historically significant support level with room to move. If you're building a position, this is the kind of entry point you look back on, either as the one you wish you took bigger or the one that taught you to respect unlock schedules. Size accordingly, set your levels, and don't let FOMO push you past what you can afford to hold through volatility. But ignoring RB entirely right now, at rank 95 with this network activity, that feels like the bigger mistake. Subscribe to Crypto Sayans. We post breakdowns like this every week so you never miss a move. Hit the bell too, because the next one's already in the works and you don't want to catch it after the price already moved.